Multiple billionaire investors are loading up on gold, including hedge fund founder Ray Dalio and real estate mogul Sam Zell, meaning now is the time to own gold. One precious metals expert is stepping forward with a big prediction. He believes we could see gold reach as high as $3,000 by the end of the year, possibly higher. So find out why and get instant access to his #1 gold investment for 2022. It's not bullion, an ETF, or a mining stock. In the past, folks using the same gold strategy could have been able to make nearly 50 times their initial investment. Considering how quickly the price of gold has been moving, you don't want to waste any time missing out on the gains he believes are in store for this investment. So to get a copy of his new free report with all the details, simply go to 2022goldmania.com. Again, that's 2022goldmania.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. My guest today is Brent Johnson. He is the originator of the Dollar Milkshake Theory. He's also the founder of Santiago Capital. Brent, always good to be with you. Welcome back to the show.
Thanks for having me. It's been a little bit, but this should be fun.
It's been a little bit, but I've brought you back because I have one main question for you, and that's, is your Dollar Milkshake Theory happening right now, and what does this mean for the global markets? But first, for the folks at home not familiar with the theory, if I had to really water it down and sum it up, it's basically a theory which is a strong counterpoint to the narrative that the next currency crisis will result in a weaker dollar. Your theory highlights that the opposite might be true. So the question is, has it begun, and will it crush the global economy?
Yeah. Well, I think it has begun. It doesn't mean it will go in a straight line, and it doesn't mean that we're going to have this crisis tomorrow, but I think it has begun. And I think investors and kind of people around the world who's kind of been watching this fiat currency versus hard assets debate, it's very easy to assume that just because the Fed or the US government prints money or provides stimulus, that automatically means the dollar is going to fall.
Exactly.
The big issue is that every other country is doing the same thing. And in many cases, they're doing it to a greater extent. And so on a relative basis, the US dollar has started to rise. And for various reasons, that causes a lot of problems. And I think it will eventually lead to a currency crisis. And maybe we're in the early stages of that now.
Right. So let's unpack all that. Firstly, help us understand a little bit about why the dollar keeps rising against this tightening cycle. Because, in past tightening cycles, we've seen the opposite. So why has the script reversed here, particularly?
Well, I think it's a little bit early in the cycle. Some people could argue that it's late because some people thought they would never be able to tighten at all, never even be able to raise rates. But it's still relatively early, and part of the reason that the dollar is rising is it's rising when a number of other currencies are not tightening. So if the whole world was tightening together, then perhaps the dollar would be falling on a relative basis. But it's really the fact that the US is tightening while Europe is still in very easy money mode. Japan is still in very easy money mode. China has started to ease. There's a number of other countries that are still having to provide either fiscal support or some kind of monetary support to their currencies. And so on a relative basis, the dollar rises. If you think about it this way, as interest rates rise, it actually makes your bonds more attractive. I mean, for how many years did we talk about you couldn't get a yield for a bond, right? They were either zero or negative. Well, now the U.S. Treasury yields 2.7, 2.8, and at one point, a couple of weeks ago, it was yielding 3%. That made it attractive to hold a U.S. Treasury bond versus a Chinese or a Japanese or any other major country, because the yield was effectively the same or higher, but you had the fact that you're holding the global reserve currency, which everybody needs to operate. So the yield differential has really helped the US dollar be strong. And then just in general, I think it's important for people to understand that however much you might not like the dollar, it is the global reserve currency. And as a result, there is great demand for the dollar.
Okay, and I want to get back to that point, and really well said, by the way. Just to take one of your points a little further here, no other country would want to see the US dollar really continue strengthening here. So do you think that's going to cause, like you said, they're still doing QE in Europe, in Japan, But wouldn't this cause them to rethink things and start tightening as well? Or are they backed in a corner and they can't?
Well, it's a little bit of both. It's a little bit of both. If earlier this morning, one of the ECB officials said, I'm not taking rate rises off the table. We may have to do that, and they've hinted around, that by the third quarter,
Yeah.
maybe they'll stop doing QE. And part of the reason is because with these easy money policies over the last couple of years, and then with the supply chain disruptions from first COVID and now, the conflicts with Russia and Ukraine, there's huge inflationary pressure. So the inflationary pressures exist today that didn't exist prior. So it's really hard for the rest of the world not to raise rates if they want to combat inflation, right? And so and not only that, but like you said, as the dollar goes higher, it starts to cause problems around the world. And, because a lot of people borrow in dollars because they trade in dollars, their invoices are invoiced in dollars, they import energy in dollars, they import food in dollars. The strong dollar makes it very hard. And so, if they don't want their currencies to lose too much value, they have to raise rates. The problem is they, similar to the US, a lot of people say the US can't raise rates because of all the debt. We could not afford to service the debt if we did that. That's true. I don't deny that. The problem is the same thing exists everywhere else. And we're seeing that especially right now in Japan. Japan has rates that have been at zero or negative for a number of years. Their banks, their insurance companies, their pension funds are loaded to the gills with either zero or negative yielding bonds. So if interest rates even rise a little bit in Japan, the balance sheets of all these big institutions come under extreme pressure. And as a result, because of the global inflationary pressures, though, yields did start to actually rise in Japan. They moved like 25 basis points. And just moving 25 basis points caused the Bank of Japan to come out and do these extraordinary measures, do yield curve control. And they basically said, we will buy however many bonds we have to buy in order to keep rates low. Well, if you think about what's the inverse of buying the bond is you're providing new yen liquidity to the market. And so, as they're flooding the market with yen, it just makes the yen lose value versus the dollar. So they're really stuck. They need to raise rates in order to protect their currency, but they can't raise rates because then you get a banking system crisis. And the whole world's kind of in the same situation.
Help us understand this a little bit. I mean, the rise of the US dollar, especially the past 6 months since the start of the war, that's when we really saw it skyrocket. What conclusions can we draw from that?
Well, I think, again, there's this popular theory or wish, or maybe there's this, sense of justice that, at some point the U.S. is going to have to pay for everything in real terms. They can't keep living like this forever. They've been fiscally profligate. And as a result, the dollar is going to lose value. And it's almost like this romantic version that, at some point the bully's going to get knocked off the top of the hill.
Yeah.
And I understand that. I'm very sympathetic to that view. The issue is that just everybody else has a really hard time coming up with an alternative. There's just nothing really out there that can supplant it. And as a result, because of that, let's just think of the last 2 years. After COVID, the dollar fell 10 or 12%. That would have been a great time or a great opportunity for the rest of the world to try to move away from the dollar, pay off that dollar debt while the dollar's low. But, they didn't do that. In fact, what they did is they issued more dollar debt. So today, they're more dependent on the dollar today than they were 2 years ago. But now the dollar's back up where it was during COVID. It's at 102 or 103 or something like that. So it's kind of a real problem because there's no real good solution. And this is why I think that there's a crisis coming, is because there's really no way to fix it without a lot of pain. And you and I both know that politicians and monetary authorities, are not going to let pain happen without more intervention.
And to your point, and I think you really expressed that beautifully, this whole like David and Goliath. And I know a lot of, people out there might want to see the bully tumble, the US dollar, but it's always like, to your point, what's the alternative? And is that an alternative that we really want?
Right. And so I think you just brought up a very good point. And the reality is, I don't have a problem with somebody who says that the U.S. is the global bully, that they tell everybody else what to do, they influence, they use their power to get things they want, and they're not moral, all these things. And I really don't push back too hard on that. I actually tend to agree with it. But the reality is that throughout all of history, that is what the global superpower has always done. And that is probably what the superpower will always do. So whoever eventually knocks off the United States will probably act just like the United States acts. And so the point I'm making is if somebody else was running the show and the US wasn't, they would probably be doing the same thing that the US is. It's just kind of how it works.
I agree with you 1,000%.
Yeah.
Okay, how about the folks out there that say, well, what would replace it would be some sort of basket of commodities, or, what about those theories? Is that possible?
Yeah, well, I think it's possible, and I think that's probably why it's possible. Now, I think it's always important to distinguish between possibilities and probabilities. And then if it's a probability, how big is that probability, right? First of all, anything's possible. We could go back to barter. I can't say that that's impossible. But what I would say is that the reason that kind of fiat currencies kind of developed, well, there's a couple of reasons, but one of them is the ease of use, right? The efficiency. It's not so easy to be shipping commodities all around the world and settling in commodities, if that's what it were to go back to. Now, I'm not saying I think probably at some point, we're going to have this crisis. The world is going to have to come together to kind of reset the system, for lack of a better word. And my guess is that when that happens, commodities, or whether a basket of commodities and currencies, will be part of that. I would think gold would be a part of it. Oil would probably be a part of it. Again, this is pure speculation on my point. But what I would say, again, going back to possibilities versus probabilities, whoever the global superpower is at the time of this reset, or whoever the hegemon is, the new system is not going to come online without their approval of it, right? Because they're going to have the power. Now, again, whether that's the US or someone else, I don't know. I think the US is going to stay on top of the mountain longer than a lot of my colleagues do. But whoever's in charge will have the biggest say in what system comes next. I think probably, to your point, it will have to have some commodities in there or some kind of basket of currencies in order to give it global legitimacy, in order to kind of sell it, for lack of a better word, to the public. But how it exactly comes about and when, I think it's still a few years down the road.
Okay, so you speak with certainty that the U.S. dollar is going through the biggest squeeze in history, to the point where it can't, no more could be squeezed out of it, basically. Though you say you don't see it as close as others. But my question to you is, wouldn't the U.S. do everything in its power to hold on to that status, Brent?
Absolutely. So, and this is kind of part of my thesis. And I want to make one thing clear. First of all, I have a high degree of conviction in my idea, but I don't have certainty in anything. I think this is one of the most uncertain times I've ever lived through, and probably one of the most uncertain times anybody's ever been through. So I think everybody should maintain a certain level of flexibility in whatever their view is. But to your question, so I guess my point is it's very possible that I'm wrong. I don't think I am, but it's possible that I am. I have to keep that in the back of my mind. But to your question, I mean, the U.S. is the biggest superpower the world has ever known. They get innumerable advantages from having the global reserve currency and being the global superpower. For those out there who think that we're the bully and that we kind of force the rest of the world to do what we want, don't you imagine that they would do absolutely everything in their power to hold on to that? I do. And that's why I say this is very unlikely to change without some kind of a military conflict. Now, I don't like that. I don't want that to happen. I hope to God I'm wrong. But that's typically what it takes to kind of restart an entire global monetary system. At least, especially if you're going to start one that the US does not agree with, somebody is going to have to knock us off that mountain. And again, I think the other part of my theory is that if somebody does try to knock us off that mountain, let's say it's a military conflict or whatever it is, the process of knocking the US off the top of the mountain would cause the dollar to go higher, at least in the short term, I believe. And so I just can't figure out how we can get a new system without the dollar going higher in the meantime. Now, perhaps they can all come out and do QE again like they did after COVID, and maybe the dollar goes down 10%. But I think a couple of years later, we're right back where we are again now for the same reasons that we're back here again from 2 years ago. Until you reset the system, there's just really no good solution.
Okay, and to that point, do you have any insights about, Bretton Woods 3 or whatever you want to call it, about where we're at with that? What do we know? What's coming out of that?
Well, I think we're probably in the early stages of it. Clearly, the rest of the world wants to or much of the rest of the world wants to de-dollarize, and they're trying to de-dollarize. I think that the success that they will have in doing that is lower than, again, many of my compatriots believe, but I think that they are trying, and so I think that maybe I still think that that's 2 or 3 years away, maybe even more. I think these things take a lot longer to play out than a lot of people think, and again, I don't think they're going to reset the entire system without an enormous amount of pain. I mean, it's the pain that
Right.
forces people to kind of come together and come to a solution. If everything is fine and everybody's making money, then there's no real urgency to do anything.
Well,
And so, yeah.
No, and to that point, and I agree with you fully, to what degree will foreign entities, I guess, be incentivized to keep buying US dollar denominated assets?
Well, so I think and I think that's kind of, until the new system comes online, you still need dollars to operate. And I think as we get into this crisis, and as you need dollars, I think it's only natural that you don't just sit in dollars. Maybe you move to treasuries, or maybe you move to U.S. real estate, or maybe you move to U.S. equities. Now, in the short term, I think those prices are coming down. I think this is kind of the initial part of this crisis, asset prices coming down. But at some point, I think what's going to happen, and when we get into this sovereign debt and sovereign currency crisis, I think capital will leave the rest of the world and gravitate into the center of the global economy, which is the dollar and is the United States. And so I think we could get into a situation where sovereign debt is crashing and US denominated assets are rising as the kind of the de facto reserve.
So, Brett, let me ask you, when you see headlines that we saw, a few months ago about Saudi looking outside the US reserve system, Israel, are these just headlines for you? Is there a sense of panic? I mean, what are you thinking when you see these items?
Well, what it tells me is that there's a desire for a new system, right? So I don't take them lightly. I actually take them very seriously. I think, as these other countries, keep looking for ways to de-dollarize and new systems to develop, I think you have to pay attention to those. But again, I haven't really seen a good argument that they will be successful in doing it. But so it's one of those things where you can't ignore it, but it doesn't mean you have to bet 100% on it either, right? But one of the ways that I kind of prepare for that is, I think because a lot of people hear me talk about the dollar and they think I'm bullish on the dollar, that I somehow like the dollar and that I like the current system. I actually don't really like the dollar. I don't really like the current system, but I just recognize it for what it is. But the way I protect against it potentially not being that way anymore is I think everybody should own gold. And I know that's a little weird for people who, hear me say, I think the dollar's going much higher. They think, well, then you must hate gold. And it's actually the opposite. I actually don't think that there's anything more long-term bullish for gold than a strong dollar, because a strong dollar will crush the entire monetary system and demand that it gets redesigned. The system is not designed for a strong dollar. And if the entire monetary system crashes, I think gold will put itself forward as at least a possibility for a new system, as a contender to be in the new system. If we just have a weaker dollar for, let's say, the next 10 or 15 years, I think gold will do okay. But in that environment, I think everybody keeps borrowing dollars. People keep trading in dollars. They take on more dollar debt. And then we end up right back where we are 10 years from now. I think the only thing that forces the reset is the dollar going higher.
Dollar going higher, which would bode well for gold and make a case for some sort of return to a gold standard. Am I hearing you correctly?
Yeah. Well, I personally don't think that we will go back to a gold standard. I think gold will put itself forward as a possibility and a contender to do it. I think governments will fight against a gold standard, but I don't rule it out either. Again, you don't have to go on a gold standard for gold to go to $5,000. And I think that's where gold is going in the years ahead. I think we'll be at $5,000 gold. I don't know if that happens 2 years from now or 5 years from now, but again, with the problems I see coming down the road, I think gold is a crucial part of everybody's portfolio.
I think when we hear the terms like global monetary collapse, I think it'd be really great for the folks at home to understand, how does that impact your day-to-day life? What does daily life look like should we see a monetary collapse?
Yeah. Well, I think the big question, and I know you have kind of viewers from all over the world, Danielle, it's really important to understand that it's different based on where you're at and what currency is your home currency.
Fair.
Right?
Yeah.
People in Sri Lanka, they're already seeing a monetary system collapse. People in Turkey are having 70% inflation. Their economy hasn't collapsed yet, but it's starting, right? And this is my point, is that I think the United States will eventually go through these same problems, but it will be the last domino to fall. And prior to that, these other countries are going to have it first. So it's the other countries that will have high levels of inflation or even possibly hyperinflation. So those people will be challenged to take, the revenues they get in their local currencies and very quickly either convert it to another currency that will hold value or convert it to a real asset, that they can help save in. The problem is that as that happens, more and more of the money that you earn goes to feed yourself and keep you warm. And that's why that's why you typically get revolutions when there's high levels of inflation. If a lot of people's money is going to heat their homes and fill their stomachs, it's much more easy for them to be upset with the leadership and then revolt against it. If everybody's happy, there's no reason to revolt, right? So if you look throughout history, much of the revolutions took place during high levels of inflation. And that's what the rest of the world is going through right now. And I think that they will have higher degrees of that than the United States prior to the United States going through.
And I think you're right. And we're already seeing it here in the US. You see the anger. Every day. There's a headline. Shifting gears here, and with the time we have left, Brett, I'd love to get your thoughts on the inflationary environment. Bill Ackman coming out saying a more aggressive Fed or market collapse are the only ways to stop this inflation. Thoughts on this? Thoughts on, we reached peak inflation. Where are we at? Are you optimistic? Does it get worse?
Well, the first thing I'll say is that the inflation has lasted a little bit longer than I thought it would, but it's starting to slow down for all the reasons I thought it would as well. Now, I don't know I don't necessarily think that we're going to go into a deflationary collapse. We might. I think you have to be ready for it. Based on a strengthening dollar, you have to be ready for something like that, another COVID event like that to happen. The issue now, M2 around the world has been, the year-over-year charts of the M2 show M2 falling a lot. But yet we've still had inflationary pressures. And I think what that shows is it's not just the central banks that were causing inflation. It also has a lot to do with the supply chain disruption. And even if, we go to a situation where the Fed continues to tighten, but the shipping lanes aren't open because China's still locked down, or you can't get commodities from Russia because they're being sanctioned or they won't sell to you. It's still possible to have high levels of inflation, even with demand coming down. And so I think we're going into this stagflationary period. And, I'm the first to admit that I used to hate the term stagflation because I thought it would, it was kind of a wishy-washy way to get out of making a call, so to speak. But I actually think that's where we're headed.
Yeah.
Maybe you learn something. You always try to learn something. And that's one of the things I've learned is that stagflation is a real thing. And when you get supply chain disruptions and you get inflationary inputs, but your overall revenue is going down because global growth is slowing, and you just get squeezed. And I think we'll have high levels of inflation in some items and high levels of deflation in others. And where it actually breaks out, I don't. But I do think we've kind of seen peak inflation, but whether it crashes from here, I'm not sure.
Brent Johnson, I thoroughly enjoyed this conversation. Thank you so much for stopping by. Come back.
Happy to do it. Thanks for having me.
I appreciate it tremendously. And thank you all for watching. Great thoughts from Brent Johnson. We'll have many more great conversations headed your way, so be sure to stay tuned to Stansberry Research, and don't forget to sign up to stay on top of all the latest interviews at DanielaCambone.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.